Hello, this is Victor. I'm here with a new video, and this time I want to talk about the half-year review that Games Workshop have just put public the past, I think was 8th of January, and I want to talk about what I see from this review, and yeah, and share with you my opinion. I think it's always interesting to see what the company will like and the company where how it's based to know how it's doing. Why I look Games Workshop is the games I play is Age of Sigmar, Warhammer 40k, and yeah, I'm looking in future maybe to play also Ninth Age. And Games Workshop is a key part. If they have problems in the business, yeah, this means that I can have big disruption in the games I play. So let's make a look also on the review, and I want to start first talking about the business model, and this is quite important. This is if you go to the I will put the link below. If you go to the website that is in the link below, a part of the business review or the business half-year review, there is first one tab that is about the business model. What is for me interesting in this business model is that the strategy of Games Workshop is to make the best fantasy miniatures in the world and sell them globally at a profit, and we intend to do this forever. So they really there is long-term execution. They want to be sustainable. They want to sell the best miniatures. But this is not new. We have listened this. They always specify that they are manufacturers. They are not retailers. Was curious for me that they specify that, although they do a lot of retailer work. But for me, the last point is the one that most of the people is missing. Is the games are key part of both our hobby and our business model. And I think we always think that Games Workshop is only focused on miniatures, but you see, in this business model, we also show that the games is what make and what is fueling the sale of miniatures. So they use the game as part of the hobby and as part of the business model. So they are the main target is to sell miniatures, but they use the games to push or to help the selling of the miniatures. And yeah, I don't think anybody's surprised by that. I think most of the people, they only read the first sentence, but if you see the business model of Games Workshop is based on these three big blocks. And if you look any miniatures company that do a lot of miniatures, you sell more miniatures than games. If you play Age of Sigmar, you sell one game to the player, but you will sell much more miniatures. So I understand that the core is the miniatures, but you need the game to help the selling of the miniatures, and in this way this is statement of the Games Workshop. Let's go to, and here I want to show. So if we look first at the review, and I will only focus on three numbers from last November 2015. These numbers are shared are the recap of December. We see that if we compare from previous year, the revenue before the revenue is a little bit lower, but at constant currency is the same. So they are hit again by the currency exchange. The other thing that is important is that the operating profit is flat. And I put 3 years before. If we see from 2011 to 2012, they were growing, but after 2012, they start dropping, and all these are the half-year numbers. So these are all the numbers they give every December on 2012, 13 and 14. And you see they were dropping about 10% or even higher in some cases. And in operating profit, they had a big drop from 11 to 6.2 in 2 years in 2014. So what is good news for that is that they stop the fall, they stop the bleeding of profit. And yeah, they maybe were expecting to grow, but it's important to see that at least they stop the loss. And also important to see that in terms of revenue, they also are flat. So it's not because they did cost savings or they increase the margin and they sell less. They also managed to stabilize the business. This is important. The Games Workshop, you see in this graph or in this table, I would say, they had two very bad years, dropping about 10% of revenue per year from 2012 to 2013 was even more than 10%, was almost 15%, and then they have lost, I would say, 8% approximately. I'm just calculating by head. So it's important to see that 2015, the numbers are not great because they didn't grow, and all the companies want to grow, but they are not bad neither. So they are, I will say, in a color marking, normally they will put this as a yellow. You don't accomplish the objective, that is green, is growing, but you are not bad, you are not losing. So it's important to take this into scope. And also important to read the letter of the CEO. They say that they are making a good progress on the strategic initiative, while they are disappointed with the decline of return of capital. So they were expecting to deliver more of what they deliver. They say that they see that they launch some great new products, and they are quite happy how they are performing. And yeah, and again they say that December sales were below expectation, and they don't expect to hit the target by end of the fiscal year, that is going to be in July. So these are two important points. They think that the strategy is working, but it's not working as fast as they were expecting, and yeah, and they are concerned that they are not going to deliver the target by end of the fiscal year. So maybe this is just a warning for the investors to be aware that maybe they will not hit the target that they had in mind. Okay, so yeah, these are the analysis, and then I went and I look what is doing the stocks or the shares. I would say what is doing Games Workshop in the stock market, what the shares are doing. I went. There is also the link in the same website. I put the link below, and you can go and see yourself. But this is what we. So if we look just the last month, we see the drop after the publication of this document. So this drop is the 8th of Jan. So we see that there is was expecting. Some investors didn't see this as a very positive news if they wanted to do short-term profit, so they sell the shares most likely. So they had a drop. But just looking 1 month in a company can be quite misleading. So I wanted to look also what they did the last full year. I mean, from December last year to December this year. And this is the graph. And you see that they were very flat, quite low, not moving up and down, just fluctuating. And then they had a big jump. And this jump was happening in July. So just after the launch of Age of Sigmar. So it seems that by some, I don't believe in casualties here. I believe that they think that some people think that Age of Sigmar was going in the good direction, and there is a substantial jump there. Now, of course, there have been some drops over, and if you see this drop, there is going around end of August, September. This drop is almost the same size of the drop they had now after the announcement. They had some drops and some ups, especially when they were close to November, December, I guess, because they were expecting to have more sales, and investors were thinking that the value of the company will go up. And then there is this big drop after Jan. Also can be, we can think if this drop can be related after, because I don't know. But even if we look this drop and we see at the bottom of this drop, this is higher than the share prices they had, for example, in April or in May. So yeah, it's a drop. It's not a good news, but it's not. They are better than where they were last year, 1 year ago. And now I look also the last 5 years. I think it's important, and this is very interesting also. If we look at the last 5, you see the company was growing, the stocks were going, the shares were going up, and they have a super big drop. And this big drop, if I was not mistaken, uh, happened around January 14. So this was quite happened more or less in the previous fiscal year, about 2 years ago. Maybe it was because the shareholders were expecting better performance, and after 2 years of dropping, they decide that this is not going well. Or I will say after, this was the first drop. So this was after, no, sorry, this was in December 2013. In December 2013 is when Games Workshop, if we look back, was showing the bad results, was showing that they were stopped growing and they started dropping. If we look at the graph, 2011 was growing, 2012 was growing, 2013 was the big drop. And we see that in 2013, end of 2013, so it's here in the point, is when they had the big drop also in the price of the shares. They recover, but they drop again, and they were quite unstable. And here we see that the increase after this increase is just after the launch of Age of Sigmar. So it seems that it is still fluctuating, is not gaining what is not following the trend that they used to have 3 years ago, but is not maybe, yeah, it's a little bit higher, and it looks like that they try to go up. We have to see how it's finishing at the end of the fiscal year. So this is all about the stocks. Just I wanted to show. So I will say that the company is not performing super well, but is not performing bad neither. It's quite stabilized at this moment. Let's look now the revenue for segment, because this will give idea of how the business is distributed in Games Workshop. And here again we have the comparison 2015, and we have a constant currency and actual rates. Yeah, we see that actual rates, they have some drop, but can we say that the trade and retail, for me it's the interesting point, is both are 40%, and then 20% is mail order. So we'll say that in terms of revenue, 40% is coming from the trade, 40% is coming from the retail, and 10% is coming from the mail orders. And if we look the evolution of that, is almost flat on all the points. If we look the trade have increased. Trade are the retailer shop, retail are the independent retailers, mail orders is the internet. So if we see that where they have lost a little bit of revenue is mainly on the retail, and the trade and the mail order is winning a little bit, and if we look at constant currency is winning a little bit more, but the main impact where they lost a little bit is on the retail channel, the independent retailers. So now we can also look, the other thing that is for me interesting to look is, so if we look the split of revenue now by regions, and here is interesting to see that they put continental Europe and UK together in one region, and then they have North America, Australia, and New Zealand, and they also have so this is also split at the same time by trade, retail, and mail order. Trade are the Games Workshop shops. So we see that the points of sale are doing well. They keep growing, and it's not bad because they have grown 0.5 in between UK and continental Europe, which is about 5% growth. They growth a little bit in North America. Where they're losing is in Australia and New Zealand. At the end, this is if we compute everything together, we see that they have increased a little bit the trade by this is 500 on 20. It's about 2.5% in total. So it's not in the trade they are not doing bad, and interesting to see that UK and Europe together is the same size as North America. So these are the key players, and you see Australia is not one of the biggest parts, and yeah, but they are losing market there. Though if we go to also, so here we have now the split in retail. Also per regions, we see that the main region is UK, followed by continental Europe and North America. Australia and New Zealand is much bigger than what we see in the picture below, but there is also losing Australia and New Zealand. So Australia and New Zealand market is decreasing in terms of revenue. UK have increased in trade, but here is losing a little bit, not too much. But Europe is the one that is losing a lot. They pass from 6,000. Sorry, this is about 6,844,000 pounds. They have decreased to 5,100,000 pounds. So it's a loss of 1.7 million pounds on business, on revenue in Europe, but it's quite an important drop. So yeah, in Europe the retail channel is not performing well, still not performing well for Games Workshop, although in UK and North America is not doing bad, is flat, it's not growing, is more or less flat. So it seems that what they worked well in Europe was more the trade, and we cannot know if the trade was also impacted in Europe because it was put together with the UK. So it's difficult to understand if UK was offsetting Europe or both regions were okay. So this is what I wanted to show. So my conclusions after all these figures and looking at all these numbers is, it seems that Games Workshop managed to stop the fall, the decreasing of market. They have 2 years that they have lost a lot of market, and we see from 2 years ago they have lost about 20% of what they used to have, and this is important to keep in mind. At least they stopped this fall. They are flat. They are not growing as they were expecting. They were expecting to grow, and this was in the letter of the CEO and the letter together with the letter that was together with the report. But yeah, we can see. Let's see in July what happens, and if they manage to address the situation and start growing, because the objective of any company is keep growing revenue and keep growing operating profit year after year. They were doing very bad 2 years, losing operating profit and losing revenue. I think it's good that they are now addressing this. It's good news to see that they are flat, but they were expecting more. So far, I'm not very concerned, since that the business is still healthy for Games Workshop. I'm not finance, and I don't know what is happening for the shareholders people, but brains. But I will say that I expect that Games Workshop will keep delivering miniatures and will keep delivering our game at least for some more time. And that's all. Now, just let me know, what do you think? Leave your opinion below about what do you think. If you have read the report, I will put the link in the comments below if you want to see what the report says and you want to read yourself. I hope you find this video interesting. And just leave your comment below, like if you like it, subscribe if you not subscribe it, and as usual, thanks a lot for watching, and see you again later. Bye.